All right,
It's Jeff.
Everybody. Happy Monday.
Good morning.
So, here's what I'd like to do to start this cold, chilly Monday morning. Who wants to warm us up with some gratitude?
I'll give you something that's gratitude. We've got some work getting done on our house, some floors getting sanded, and we have to be out of our house for like 5 days. So my wife said, "Hey, a friend of mine's got a house up at Lake Tillery. They said we could stay there." And so been up at Lake Tillery for 5 or 7 days and just nice environment, getting a lot of work done and enjoying it.
Love it, man. Hey, thanks for sharing that, Dave. That's awesome. Great thing to have pop up, right? Especially when you're doing flooring like that. So that's fantastic. Thank you for sharing that. All right, who else has some gratitude? Let's kick our Monday off. Who's got all their Christmas shopping done?
Uh-oh.
DJ, I'm staring at you, buddy.
You like my hat?
I do like the hat.
I do not have my Christmas shopping done, but
No,
I am grateful for a lot of things, and I'm grateful for all the people I got on my team helping support me, and I'm grateful for one of the busiest Decembers I think we've seen in a long time. So grateful for those things.
awesome, man. Glad to hear that. Thank you for sharing that, DJ. All right, let's get one more. Gratitude. Who's got some gratitude for us? How'd your football teams do this weekend? Who wants to speak up about that?
Go Buckeyes. Whoops.
Okay, how about your NFL teams?
I'm grateful that the Packers beat the Bears.
There
And
you
the
go.
Panthers are what, tied for first? I'll take that as well.
Yeah, there you go. Love that. All right, cool.
Watch out for those Patriots with that little guy from Myers Park, Drake May. He seems to be doing some damage.
Yeah, how about that?
Right?
So makes good, man. Love it.
He may
Love the
work
local
himself
sport.
into a starting role, maybe.
All right, gang, let's jump in here. I wanted to get some gratitude going before we just jump right into numbers. So, actually, before I go to screen share for a minute, I want you guys to think about something in your business. Um, I don't know if you know this or not, but you also have to be, while it's funny. Okay, you run a real estate sales business, and think about all the jobs you have running that business. You have to generate leads, you have to convert leads, you have to write contracts, write and negotiate contracts, you would have to close contracts, you have to run a database, you have to run the financials in your business, you have to track certain key metrics, you've got to look at your profitability, you've got to budget your time. Man, the list keeps going on and on as a business owner, but I'm going to add one more to it today. You have to be a forecaster. Now, by that, of course, I don't mean weather. Unless you want to become a weather forecaster, apparently you can be wrong most of the time and keep your job. I'm not picking on forecasters, weather forecasters by any means, but I am talking about real estate forecasting. So, what do I mean by that? Well, it's easy for us to have different ways to say, somebody asks us, how's the market? Typically, how do you respond to how's the market?
Unbelievable.
Yeah, we've used that one for a while, right, PJ?
I usually ask why they're asking because I want to know why they're asking about the market. I'm trying to identify if they're a buyer or a seller.
Yeah, love that. Curiosity. Curiosity to be, well, what information about the market intrigues you, or what, are you planning anything? You planning to do anything in the market? Yeah, love that one. What if somebody said, hey, you know what? It's that time of the year. You're probably going to find yourself at social gatherings because of the holiday events coming up. And let's say somebody asks you maybe this question. So where do you think the market's heading in 2026? How would you respond to that one?
I think that's a very interesting question. Why do you ask?
Yeah, it kind of goes on the same line that Sharon mentioned, right? Somebody asked you to predict the market next year. What would you do? What would you say?
So I'd go factual. And we have a script that we use on our team. And I would say, looking at the Charlotte market, it's the second largest financial institution in the country behind Wall Street. You've got Bank of America, Wells Fargo, Truist, 3 of the top 10 banks here in Charlotte. And whenever you have that much finance in one area, that's why you get the MetLifes, the Honeywells, you get all of these financial advisors, firms, LPL Financial in Fort Mill, because they're drawn or surrounded to the finances and the money. So with that being said, I do not think that our market would cease. I think it may slow, but we'll always have a demand because of the financial landscape that is the economy of Charlotte.
Yeah, thank you for that, PJ. So that's a great kind of broad overview of kind of the health of our economy locally here in Charlotte. We do have a lot of banking here. There's a lot of banks that are headquartered here, even regional banks. And of course, Wells and B of A have huge presence here. I think it was just announced too that wasn't it Shaq Thompson, who used to play for the Panthers, just sold his $9 million home. But I think he sold it to an executive at Wells Fargo.
One of the Hornets guys has their place listed over by Marvin Ridge High School right now, and I want to say it's like 13 or 14 million.
Yeah. So here's the thing, guys. Charlotte has kind of evolved into this market where, of course, we know we've got the population growth that's been very consistent, not just since the pandemic. It's been pretty consistent since I moved here. I moved here in the mid to later 80s. And, the growth has slowed at times. I don't think it's ever stopped or gone negative. But, we've seen massive amounts of growth in the Charlotte market over the years. So, I think we have to have first that kind of understanding. Then, to BJ's point, let's look at like the industry that's coming in here, right? We don't typically bring in a lot of manufacturing jobs. We tend to bring in more, I'd say, white collar style jobs, but it is all tied to like the financial. We have a very strong financial hub here, and people, businesses, different groups are all attracted to the money that brings and the opportunity it brings. So, if we wanted to kind of just give an idea of what we predict Charlotte's future will look like for 2026, from an economic standpoint, I'd say right now, fairly healthy. We're probably beyond even fairly healthy. We're pretty strongly healthy. We don't really anticipate. The other thing that we have to keep in mind too is we have a very strong transportation hub here. Having a major airline hub definitely bodes well to attract those businesses as well. And of course, Charlotte Airport keeps growing. So, we have a lot of positives that way in terms of our economics. Okay, so what does that have to do with our housing? Well, if you were on last week on this call, there was another graph I had that was kind of showing, I had a pull down in there that basically said, here's what it could look like if interest rates get closer to the 6% range. It anticipated and this was an NAR tool resource. And what it did is it said, basically, the closer we get to the 6%, or around 6% going into 2026, we can anticipate over and above what we're already doing in terms of our level of activity to see an additional 5,000 units potentially sold, or a little over, I think it was 5,300, more homes sold than we are at the level we're currently selling, simply because rates are getting closer to that 6% mark. All right, so based on that, what are rates predicted to do for next year?
Go
Hover
down.
down below 6%. Yep.
Yeah, I mean, there's a lot of different ranges on this, and of course, a lot is tied to the Fed and all the stuff that we hear there. Most of the housing and mortgage economists are basically predicting that our mortgage rates next year are going to be about a half a point below where they are today, where they have been this year. This year, nationally, they've averaged at about 6.6. So they're anticipating probably slightly above the 6 mark to maybe just below the 6 mark. So already there's a good indication that we're going to see an uptick in the amount of activity going into 2026. It's purely driven by what's going to happen with rates. So then there's another thing we need to know about, because if there's nobody putting their house in the market, then guess what? There's nothing to buy, is there? Even if there is buyer demand. So have we seen an increasing amount of homes coming on the market, say in the last 6 months?
Inventory is up from where it was 6 months ago, yet actually in November, we saw the inventory go from 3.5 months of inventory down to 3.4. And I think that's just because a lot of people weren't putting homes on the market. So it is still, but for the month of November, we did take a little bit of a step backwards.
Okay, love that. So we do see an increasing amount of sellers willing to put their home on the market. So we got a healthy economy, we have lower rates, we're seeing an increasing amount of inventory, other than maybe to what PJ was talking about just for the month of November. But all in all, are we seeing some signs that point to us having a higher level of activity in 2026 as it relates to real estate?
Yes.
Thank you, PJ. Yes. Yep.
Yeah, and
Yes,
Chip, if you want to, I mean, look at the inevitability of it. 2024 was the 30-year low in inventory. I mean, not inventory, in units. 2025 wasn't much better. So as a positive thinker, 2026 has got to be better.
Yeah, I mean, right, Dave. We've been kind of nationally, we've been bouncing around that 4 million units sold in the United States number, which is running a 35-year low, right? I mean, these are all historically low numbers in terms of the amount of units that we're moving, that we're selling. Resale units sold every single year for the last really 3 years now. So by that definition, our industry's actually been in a recession, just because of the units sold number not really changing. So if it's being predicted that we might see about a 5, 6, 7% bump in the amount of units sold going into 2026, that's a national prediction. It could even be a little bit higher. I think NAR is even saying maybe as much as 12% increase. That would put us probably somewhere in the 4.3 to 4.5 million units sold. What do we think is going to happen here in our market? Will we kind of trend along that same percentage increase?
I think we'll be leading the pack. It will be at that number, if not better. Charlotte still has 157 people a day moving here, and I think we'll take it over this year. But we consistently, 23 were the most desired or moved to city. 24 we were number 2, and I think 25 we're going to be again number 2 or number 1. So there you go.
Yeah, no, love that. All right, so here's what I want to do. I'm going to give you guys just a different, once again, you know me, I'm going to have resources on information. This is just a different one that I have. And this isn't really giving me the, hey, crystal ball, what's really going to happen next year, but it goes along the line that we're just talking about right now. So here's what I want us to do, because there's some interesting things that I can pull down in this one. Some of this stuff, we've seen it before in other data points that we kind of talk about on this call. But if you see here, this kind of gives us, I'm going to unclick this thing, market segments for a minute. And I'm going to unclick the 7-day median. And here's what I want to look at. So this is the median list price. And this goes back to December, actually. It goes back to Christmas Day, where they started tracking this particular one. This goes back to December 25th of 2020, where our median, our Our 90-day median list price, $549.5. We had a little bit of a dip going into 2021 at like 5.25, and then we had a little bit of a spike as we started to see kind of a normal, like kind of, okay, how are we really going to handle this COVID thing? What's it going to look like? We saw interest rates pop down. We started to see these spikes in buyer activity. But look at the jump we had here in that median list price from, let's say low fives to here we're pushing like 680. Not even 4 months later. Okay. Then of course, it keeps settling down and all this, but then look at what started happening here. When we looked at February of 23, we had this massive jump. 625. Look at this one here. Let me get up to the peak of this thing. 939. Median list price, June 2nd, 2023, a 90-day average was 939. What caused that?
Wasn't that when interest rates started jumping?
So we started to see the interest rates started in 22. Which is why we started to see in here, the interest rates started to climb up like the summer of 22, July timeframe, June, July. And look at what started happening to our median price. We went from say 683 down to about 615 in terms of that list price, that 90-day moving average. But then, all of a sudden we went, what the heck? We had this huge jump. So let me even preface this a little bit more. This report is pulled for Charlotte, North Carolina 28277. So if we had the interest rates that were climbing in here, buyer demand fell off the cliff practically, right? Because everybody was freaking out about rates that were rising as fast as they were. Why all of a sudden did we see this? I'm going to give you guys a homework assignment on that. I'm not going to tell you the answer. I want you to do that research. It's to be good for you to figure this one out. So why do we see that massive spike from say late February 23 going into June, the very beginning of June of 23? So we're talking about March, April, May in a 90-day period. All right. So I'm going to have you look up that one and get back to me on that. And of course, I've got all these other categories. I can look at average days on market, price per square foot, all that. Properties with price decreases. Let's look at this real quick. Again, I'm going to unclick the 7-day average and go to a 90-day. We've seen this kind of roller coaster here of what percentage of homes over a 90-day period average have experienced a price reduction. So if we come down here to 22, like May, June 22, only about less than 18%, about 1 out of 5 are taking a price reduction. By the time we get over here to January, the end of January of 23, it was 1 out of 2 were taking a price reduction. Then we get down here to June of 23, we're back down again. Very few homes are taking a price reduction. We're back to 1 out of 5. But then we had another period where, guess what? We're back to about 1 out of 2. And it's kind of been doing this for a little while until we get finally to where we are today. Here's the next one I want us to look at real quick, because I found this one interesting. So let's look at relisted. Again, I'm going to unclick the 7-day. I want to look at a 90-day average. So again, this is Charlotte, North Carolina, 28277. The 90-day average, 46% of homes are going to relist. That was June of 23. We get down here to September of 23, 3% of homes are going to relist. And notice what's kind of been happening here ever since. We've been holding right around this low amount of homes that are going to relist. Now, here's what I want to do. I'm going to go back over here and click on this market segment button. And here's what this starts telling us. So we're still in the percentage of homes that relist category. But what this now represents is the top 90, upper 90, lower 90, bottom 90. If you think about all of the homes that are in this category, they basically just break it into 4 equal segments based on price. So we have our top price, we have our upper, which is right underneath that, the lower, and then the bottom. So this represents every one of these categories is a 25% up market. And if I look down here, it kind of even breaks it out for me a little bit more. And it says that the top market would be this median price of 1.3, about a 4,200 square foot home, 4-bedroom, 3.8 baths, age, blah, blah, blah. It gives you, it's breaking all of these categories down for us. So it's funny because what we start seeing is when we move over here, we start seeing like, okay, the top 90, that 1.3 million median price, we're seeing less than 2% of those homes actually will relist. Where if I look at the bottom 25% by price, we're at about 2.7% will list. And a category just above that, about 4% will relist. So this is the price points right in here, these bottom two. They're kind of giving us the indication, and maybe even if I include this third one up here, these are the price points that are going to be more likely to relist their home. If for some reason they fell out of contract, and by the way, this company, their definition of relist would be they fell out of contract or the listing agreement just simply expired. Okay, those are the two that they are categorizing. They did not mention anything about listings that were withdrawn. That could be included in their information around listings that expired. It didn't specifically say that, however, so I'm not going to just maybe assume that. But for the purposes of what we're talking about here, this starts giving you guys an indication. Maybe for those of you that are interested in going after expired listings, I'm not telling you to get into the hyper specifics of resegmenting your expired list, but this could be an indication that maybe your higher likelihood of people that want to have the conversation may reside in these lower price points, say maybe 750 or less, compared to maybe 750 and up. It doesn't mean that the upper prices aren't going to relist. As it stands right now on a 90-day average, this is what we're seeing. Okay. So I wanted you to kind of see this information. And as always, if there's anything in any of this that you need more or would like more information on this, please let me know. I can see what we can print off as a PDF and get it sent over to you. Market Action Index, this company creates this MAI. And basically what it's telling us, and a better way to look at it is right here on this, is they create through a bunch of different metrics that they calculate. This is how they answer how's the market, by giving us a one kind of visual clue to this. And basically what it's saying is that, of course, we're still here in a seller's market. 30 is kind of the balanced market line for this particular index that they've created. So we are slightly in a seller's market. And yet, if I went down through and I wanted to go back and look at different market segments by price, it's also going to start telling me exactly how I'm doing in terms of that market index. Okay, but on average, we're sitting at 39, slightly above the balance, still a seller's market. There could be some additional downward pressure on prices. So obviously you have to keep an eye on that. But here's kind of the overview right now. This week, the median list price for Charlotte 28277 is 740. And the market action index is hovering around 39. This is less than last month's index of 40 because inventory has decreased to 71 units. Okay. So as always, I'm going to stop sharing this here real quick. Over here. Where'd everybody go? Hang on, sorry about this, guys. Second. Go. Nope. All right, so what questions do you guys have for me? Gave you a little bit kind of different look, same similar type numbers. There's always a new resource out there or a different resource that you haven't seen. What are your thoughts, your comments, your questions, your ahas?
I've got a question on the homework.
Yeah,
Okay, so I haven't done the research, but could it be that spike in the price due to a post-COVID effect? And the
I
prices,
don't know.
I'm sorry?
I don't know yet. Well, I mean, I know. I've done the research on it.
Okay,
I really want you guys to kind of collaborate on this. Get with some colleagues. Because next Monday, I'm going to ask the question again, like what was causing this big jump in median price in that 3-month period of time in early 23, at least in 28277. I think this is a good exercise to really kind of dig into how the market functions. Because as Gary Keller says, we have to be the local economist, right?
mm-hmm. All righty, thank you.
Yeah. Sorry, I'm not giving it up that easy.
No, that's fine. That's fine, thank you.
No, thank you for asking. All right, anybody additional questions, comments, concerns, ahas? All right, gang, appreciate y'all being on. Happy Monday, be safe, and we'll talk to you soon. Take care.